impactful hour of financial information here on Benzinga's pre-market prep. We got a lot to discuss today. We'll figure out what companies are going to warn this week. I mean, 3 or 4 warned last week. We'll find out Triple D's disaster of the day. We'll have Tim Quad Witch coming on at 8:35 to talk about the markets after the expiration. We also got some macro news to cover that's moving the markets. Roll it, Mitch.
Coming to you live from downtown Detroit, this is Benzinga's pre-market prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
See the screen here to know what's going on in the markets. S&P futures down 36 handles at 38.54, already taking out the low from last week. The buck is strong. That's up 22 cents. That's not helping things. TLT in the red by 65 cents, 106.42. Crude, that's heading to $80, down 212 at 82.63. Gold and silver both in the red. Bitcoin making a new low for the move here, down $940 at 18,635. And Ethereum futures, they're following Bitcoin lower. We're down $121 at 1306. So, man, I guess I'm going to have to stop watching football at night and watch 60 Minutes, Triple D.
I mean, the Lions won, though. We got to start with the Lions.
Oh, yeah. What about
here.
the Finns? What about the Finns? Come on, Mitch.
There you go, Mitch. Good weekend for all of us.
Come on. His name is Tua. Don't forget it.
Don't forget it. So we're taking over Stocks and Jocks here for a second. This is a good weekend.
Hey.
I'm a little worried. I got to play Tua's little brother on Saturday. Maryland's coming in. I can't get Mitch, or not Mitch, can't get Spencer off the couch to come in. But I think his name's Tagovailoa. So I'm worried about that. Michigan's a 20-point favorite, but scrambling quarterbacks have always hurt Michigan. But, man, big comeback for the Finns. The Lions held on. I mean,
I thought they were blowing it for sure. I think every Lions fan thought we were blowing this for sure. We've just been down this road before, but we held on. It was a win. You know what? 500 so far. I'll take it.
When's the last time they've been 500?
500 after 2 games. When's the last time they've been 500 after 2 games? It's been a while.
Yeah, at least it won't be.
We're 3-1. What year was that? 3 years ago, we were 3-1.
Type of season.
Remember we started 3-1. And we were all pumped up, and then we lost 7 in a row.
That was back when
that was like 3 years ago. I'm losing track of years here with the COVID. But
one good story, and then we're really going to do financial information.
We got to start getting into stocks.
Okay.
Yeah, people are going to get upset. It's not a
so,
show.
and I bet you no one in the chat remembers this because they're all too young. But my senior year of high school, the Lions started out undefeated. And they came out with a song.
That means they weren't 1-0.
You're aging yourself.
No, they were
there,
like
Joel.
7-0, 8-0. And it was Another One Bites the Dust. Have you ever seen that video, Dennis? You've had to see that video.
Well, I know the song.
Mitch, can you find that video for us?
There's a Lions video?
It was a Lions video. And they started 7-0. And that happened to be my senior year. And my buddies and I, it's a long story, but we kind of made up a satirical skit to it. And we did it during homecoming. After they put out the video, I think they lost every game the rest of the season.
That's how it works.
Yeah.
Whenever we get our hopes up as Lions fans, they destroy our hopes. So as a Lions fan, you can never get your hopes up. Because eventually they're going to find a way to lose.
This is way before Barry Sanders, too. But
those were the good years. The Barry Sanders years were the good years. Oh, here we go.
No, that's Billy Sims. Do you got another one?
This was it. This was 81.
Here we go. Oh,
the good ways.
Is this the way it starts out? Go a little bit farther.
81 though.
No, this was 81.
It was 81, at least from what I've seen here.
We started that year 7-0 in 81.
I said it was my senior year of
Is
high
that
school. I mean, come
possible? I
on.
didn't even know that. I never knew the Lions ever started
Could you
7-0.
find another one bites the dust?
No, we
Detroit
got
video.
6 minutes. We can talk
All
football.
right,
People
all
are gonna
right,
leave
all right.
us.
Go ahead. We'll get back to the stocks. As you can see, I watch stocks, guys, not just football.
Okay.
But let's get back into it. Let's go ahead. Let's talk about it. Bitcoin coming down fast there. And Joel, you had a question about Bitcoin. What do you think?
No, it just I have the Scaramucci FTX high. That's the only thing that I can think about.
That was a wicked little. Was that the Scaramucci bounce the 5 days ago? Is that
Yes.
what that was? Yeah.
Yeah.
Sell all bounces. In my opinion, just my opinion, I think Bitcoin could see 10,000. I've been saying that. I said it could see when it was 50. I said it was going to 30, 20. I'm still going on the bear train. I'm sticking with 10. I mean, that BK on CNBC
10.
was the biggest Bitcoin hyper forever, and he says he's short the thing. So, anyways, I don't know. It's tough with risk. It's a risk asset. It's moving with the overall market, so you can just group Bitcoin in with all the other stocks and NASDAQ stocks here right now because it just moves with the NASDAQ. NASDAQ starts to get out of the gutter. Bitcoin will get out of the gutter too, but it's hedged against, inflation. It's hedged against, market pullbacks here. It's just not been the story here in the last year and a half. It might have been the story over a year and a half ago when there was outside people and everybody wasn't, the masses weren't in it, but the masses are in this thing now, and this thing just moves with the NASDAQ.
All right, we got to get to the macro news here.
Let's go to the major news. Definitely hitting the markets. U.S. President Joe Biden said U.S. forces would defend Taiwan in the event of a Chinese invasion. Asked on CBS 60-minute interview broadcast on Sunday whether U.S. forces would defend. Yes, in fact, there would be an unprecedented attack. Acts to clarify here, of course, if it was unlike in the Ukraine, U.S. forces, American men and women, would defend Taiwan in the event of a Chinese invasion. Biden replied, yes.
I can't. That shocks me, to be honest, that, he flat out would just say that on 60 Minutes. Like, I'd beat around that question if I was him. So obviously, if it looks like if Taiwan does get invaded, we're going to World War III is what Biden's saying. Whew, doesn't sound fun.
Joel, you got to share with audio. But
we've been talking, me and Mitch have been talking about this for a long time. This is the next big thing for the markets is, eventually this Taiwan situation is going to escalate. This is the scary thing for the market here. It was the reason that I didn't want to own stocks originally. And then obviously, the inflation's still not peaking. Remember, I was talking 2.5 months ago. I thought inflation was peaking, maybe own stocks. And it's to the Taiwan situation that keeps me out. I'm scared. We've been a month and a half early on this, Mitch, but I still think it's a major concern here for the markets. And I'm just, I'm scared to be all invested here with this elephant sitting in the back of the room.
I mean, just last week we got sanctions on Raytheon and Boeing, right, because of weapon deals, and I think this is just going to continue to kind of tempt China. I think almost it's getting to the point where there's so much in the news that is battling back of what the Chinese government is doing, and we know the Chinese government, I don't feel like they're at the point where they're going to go ahead and allow the U.S. to continue kind of bullying them, pushing them a little bit. Eventually, you bully the biggest bully on the playground, you get pushed.
You don't get bullied, though. You don't get bullied. Any U.S. president would have to talk like this. You just can't cower down. Any U.S. president going back to George Washington would say the same thing. You got to stand up to the bully in the yard. You right?
Didn't stand up to Russia.
Well, they're standing up to China.
Yeah, they didn't stand up to
it.
Good point, Mitch. They didn't stand up to Russia at all.
I don't know. How's that war going for them over there? Have you read any updates? How are things going over there for Putin?
It's not going well for anyone.
He's letting prisoners out to fight, and they're re-enlisting people. So I don't know. I'm not a war expert, but I wouldn't want Biden saying anything else. I mean, whatever.
There's a point, and I agree with both of you. I agree, that Biden has to put on a strong stance. It's a tough question for him to answer. I would have beat around it if I could have. If I was the president, I wouldn't have came flat out and said that, because now China sees that and says, I don't know, maybe that's
Dennis, when you got picked on in school, did you just eventually have to go punch the guy in the face?
Here's the problem.
Or get a buddy that was
the worst
bigger to
case
punch him in the
scenario
face?
when you get punched when you're punching somebody in the face, you get punched in the face back. That was the worst case scenario on the schoolyard. They don't have nukes. I'm not saying China has a lot of nukes, but China, there's a reason Xi's visiting with Putin and stuff. You kind of see, teams are forming here. It's a scary thought, World War III. Obviously, I'm pretty happy with where I'm at. Canada, North America, I don't want World War III. That sounds scary when we're talking about nuclear war. So, and it is a distinct possibility if teams start coming up. You've got North Korea is obviously going to side with China and Russia. They've already said so. So, just a pile of nukes on both sides, wars, man, I'd avoid it at all costs. That's the reason. That's the only reason we didn't help out Ukraine is because we're scared of the situation that there could be nuclear retaliation.
Yeah, I mean, if it's
but China has nukes too.
You know what? But then we're all gone. If they start flinging one, then we'll fling a dozen, and it's over with. I can't worry about that. I mean, I can't worry.
Well, we can worry about it. We can stop it from happening.
Well, I'm not worried about that.
Fight.
I'm not worried about nuclear war because if it's nuclear war, then I'm agreeing with you guys. We don't have anything if there's nuclear war. But what I'm more concerned about is inflation.
Mitch,
let's
bring it back. Who is that analyst that year that said there was a 10% chance of a nuclear apocalypse that came out with the paper? But he said buy stocks anyways. Buy stocks anyways because of the nuclear apocalypse doesn't matter anyway.
Yeah, who was that?
Who was that? That was an awesome
forgot.
paper.
Oh,
it was a God press for one day.
Yeah, it did.
It's a 10% chance of basically a nuclear apocalypse where we're all dead from nuclear war. 10% he gave it. But then he said, you got to buy stocks anyways because if we're all dead, money doesn't mean anything anyway. So there's a point there too. If we're going to worry about nuclear war, you might as well buy stocks.
Elon, save us, please. Save us. SpaceX. We need to get to Mars soon enough.
Yeah, I know. You better start stepping on the gas there. Let's go talk. Okay, let's bring it to stocks individually here because we're in 13 minutes on Lions and nuclear war.
Well,
I don't even know what to say, where we want to start. This is an everything sell-off. So if we look here, and I come in some days, some sectors are stronger, some sectors are weaker. Today is not that day. It is an everything sell-off. The only stock performing well and really kicking butt lately is my Netflix. Why is Netflix up again here, Money Mitch? We got Netflix trading in the green. I'm looking at the entire screen. 200 stocks, S&P.
Wow.
Obviously, big movers. It's the only one that I see in the green here today. I threw you right under the bus there. It's Oppenheimer upgrading the stock to outperform, announcing a $325 price target. So that is the reason for Netflix trading up $5 here this morning. And if I'm looking at the screen, it's the only one really in the green. The big majors, you see a few couple home builders in the green. I see smaller stocks, but out of the big
Autozone, man, the Autozone.
Well, the Autozone is going to get to that one. That reported earnings here, but the Autozone is up $50. It reported, so we're gonna get that one in a second. But we're starting with the majors here. Out of all the big, S&P companies here, Netflix the only one green.
So here's my theory on it. The boys got together. The analyst boys got together in the Hamptons over Labor Day, and Jeffries and this Oppenheimer guy, and they said, you know what, let's make a run in Netflix. Is what they said. I'll go first on Friday, and then on Thursday or Friday, and then you do it next week. I mean, that's right. That's what's been moving the stock, right? We don't talk about analyst ratings much having an effect. They're ganging up. Well, this is the second one in a couple days. What is the other catalyst in a negative market? So, what if Goldman Sachs comes out tomorrow, or Morgan Stanley? I don't even know if these companies cover it, but we talk about analyst ratings. Sometimes they're an excellent fade. Sometimes they gang up together. I remember that one time there was McDonald's. I can't remember when it was run. It was definitely
like
pre-COVID.
5 upgrades in a row.
Like every day McDonald's came in and got an upgrade. And I can't remember. It was pre-COVID. It might have been, I don't know. You'd have to ask Spencer. Maybe it might have been in the summer of 2017. I can't remember, but that's what I'm looking at Netflix. The charts are looking okay. Lisa loves the Stranger Things. I can't watch it. I mean, it scares the living daylights out of me. Dennis, you watching that?
No.
Oh,
sorry,
man. Okay. Your 2-day high, have we cleared that? Yeah, we're trading the green. I think about 250. I mean, I'm not going against these two analysts. A pair of highs off the rebound come in at 251.62, and 251.99. That's all I can give you here in Netflix.
My wife is still long, so I have it in my wife's RSP account there. It's been slowly climbing back. We know I did the double down. I'd bought originally when Ackman bought like 325, and then I bought more at 180. So the first purchase was terrible. The second purchase was good. It was maybe even 350 when Ackman bought, so it was higher than that. I'm still down in the overall position, but it's been coming back. It's not down much now. I mean, the relative strength's great on this stock. I'll say that. The valuation is not crazy anymore. I think on pullbacks here, you're seeing which stocks are some separation happening. There has been wicked rotation. You can see that there is some of these beaten down tech names that have been holding up. You get like the Metas. So here's two stocks to compare: Meta versus Netflix, and they're two stocks that are value tech. You got them in the value tech category. Both the valuations have come down from nosebleed to actually being under market valuations here. And both going in the exact opposite direction. Meta gets cheaper every single day, and Netflix is holding up. So you can see the separation where a company is actually doing well, which is the case of Netflix, I believe. And then you got the case of Meta, where they're trying to go to the metaverse, and we know metaverse stocks are not having a good year. But I think Facebook is getting TikTok to death. Instagram, TikTok is not helping any of these. It's obviously hurt Snapchat. And I think Meta, I've said this before, I've played it a couple times out the 160, but I look at this and I just think this is one of the biggest value traps out there. The value keeps deteriorating.
Oh yeah, that's Meta. Well, that 155, we talked about that for a long time, and it's one of those levels where you have to look both ways on it. It was support, it was support, it was support, and then when it took it out, it didn't even what that one day that it took it out, it came back a couple days later and sniffed it, but now you're looking at the COVID low. The COVID low comes in at boom boom. COVID low of this, I believe, is one. Where is that? 137.10. That's my next downside target for Meta.
It's
And
all the way back to the COVID low.
COVID low, COVID low. But
Holy.
just being on the being on the
I mean, a
opposite
lot of
end
stocks
of
are going there.
being on the opposite end
There's
of
a lot
things, because
damage.
media doesn't like when you're negative all the time. Who's been an absolute champ as far as holding up? I mean, look at this Tesla.
It's been
I mean,
holding up.
come on, look at this.
It's
I know.
it's been one of the
It's
most bullish out of the
I
big
mean,
names. That's
it
for
won't
sure.
go down.
You got it. And again, the risk. I love Elon Musk. I've never liked the valuation of the stock. The relative strength is awesome. The risk is that Musk gets stuck with Twitter. If so, it's going to be a binary event eventually when we get a decision on what's happened with the Twitter situation. If Musk loses and he's getting Twitter, Tesla gets hit. If Musk somehow gets out of this with just a fine or just paying just a payment,
Nothing. Yeah.
oh, Tesla will rip on that. So that's where you're going to have an outside event like Twitter, which has nothing to do with Tesla in itself, is obviously connected through Elon Musk here, and that matters. But the relative strength on Tesla, hey, you can't argue with that.
We'll see
I
what
just
happens
wanted to
there.
mention
Let's
it.
go towards our earnings stock of the day, which is going to be Autozone. Seems like definitely the used cars parts are definitely pumping out there. EPS at $40.51, beating the $38.38 estimate. Sales at $5.35 billion, beating the $5.15 billion estimate. Autozone's fourth quarter same store sales increased 6.2%. And a nice little earnings pop.
Getting a lift here. I mean, if you look at the last, you won't see it because it's all odd lots. It's funny. It's traded so much, but every single trade today has been an odd lot. So it looks like it hasn't traded today. But I can tell you, if you get the ARCA book, you can see all the odd lots bid. There's 5 shares bid in $2,221. Another 1 share, $2,217. So it's bid up here at $22.20, but nothing with size. It is bid $22.10 for a full 100 shares and $22.13 actually for a full 100 shares. But I mean, this is a thin stock. It's a $2,000 stock. I typically don't trade $2,000 stocks because it's so hard to get in and out of. I mean, if you're trading with 1 share or 5 shares, I guess you can get in and out of that. You got 100 shares of that. It's really hard to work out of it. So that's why I typically just don't trade it. But the report so far so good. It's held up well. During a recession, you got to wonder, AutoZone, Advanced Auto Parts, people aren't buying new cars. I don't think they're going to be buying new cars. They're going to be fixing up their old ones. So, I think there's an argument there for these stocks that they, not necessarily recession proof, but they probably do better in a recession. AAP's been ugly here. I believe they have not reported yet. Or maybe they did. That was the gap down. And then you got O'Reilly. So the three that I pair together are AutoZone, O'Reilly, and
O'Reilly.
AAP.
They need
O'Reilly.
I don't know
a
how you
stock
trade.
split.
I don't know how you trade those things. But with the AutoZone, I have absolutely no idea where to buy it. But if I was long for any particular reason, I would have an offer out exactly at 22.8797, because that would be 1 penny from the gap. You had a gap 22.8796. So I'd be a penny ahead at 22.8795. That would fill the gap from August 23rd. That's where I would be. That's it. Besides that, I had 1,300 shares have traded up $80. I couldn't buy anywhere. I want to know what to do. If someone gave it to me at 21.50, I mean, 100 shares, how much would you have to knock it down to get out? So there,
No,
see what
it's
happens.
just too thin. I mean, to trade size. Like I said, if you're trading 1 share, 5 shares, 10 shares, have at it. But you want to get size on that thing, it's very thin. So it's a stock that I don't trade just because. And people say, well, it's $2,000 stock. But I mean, so, 100 shares is only 0.5%. And, if you're going down, $10 or whatever. But I mean, I don't want to go down $10 to try to get an out. So it's thin. These stocks are thin, and these stocks are really dominated by off-exchange market makers because they can get, obviously in and out a lot more easily with, not being able to, just being able to take the opposite side of retail trades. So it's a stock I just don't trade for those reasons.
All right, let's keep going.
Price impact.
Let's get out of AutoZone. Let's go to Wix. I don't know if anybody has used Wix, but activist investor Starboard revealed a 9% stake in the website development platform Wix.
That's good and everything, and Starboard's good and everything. You're coming into resistance zone. We're in the sell the rip market. So with all that, no, thank you.
Yep. Just touched $79. Not going back far on the daily. You see 79.60 and 80.95. Those are two potential levels. I've seen Starboard now. I've seen them really move some stocks. Maybe this isn't the best market environment, to just have this crazy runaway day. But 2 daily, if you're looking for potential targets on the upside, there's a couple for you.
All right, let's go to let's do Take Two. Take Two is getting some news here after a hacker published the authentic pre-release footage of development of Grand Theft Auto 6. And so here you guys see the most anticipated video game from Take Two Interactive Software being kind of a pre-release deal here by the hacker, putting it out there, and Take Two definitely getting hit on it.
I sold my Take Two last week into the rip.
Just
again, I was just raising cash. This is after the CPI. After the CPI came out like it did, I was like, this is not good news for the overall market. And I went in and I basically sold everything I had recently bought. I'd recently bought Take Two, sold it. Recently bought FCEL, sold it. This is the long-term account. So I want to get myself back up over 50% cash. And the stocks I just bought, I have new information. I thought CPI, like the rest of the world, was going to be at least, coming in slightly light. When it didn't, I was like, that's new information that I have to process immediately. We know I was selling stocks as quickly as I could that day. Take Two was one of the victims of my selling.
What's going to happen here just under 118 where Triple D bought it? They're low right at 118, and then you got 3 lows right in the lower mid 117 handle, 117.5. Haven't hit it yet in the pre-market. I know nothing about Grand Theft Auto or any of those games, but I do know that there has been prior daily support, and that's also some monthly support too. Wow, look at this bottom right chart. This thing's been clinging to 120. I'd be kind of nervous if this doesn't reclaim 120 real quick. Sorry about
that. Are you okay?
Sneeze.
You're alive?
I just
tried.
I tried.
I got
that was such a quick sneeze. That was such a quick sneeze. I couldn't go to the mouth. I couldn't go to the mute button.
Well, you get over 1,000 bless yous. I know you got it out there. So
there you go.
Wow.
Well,
woo.
Bless you, Joel. Bless
Woo.
you. Joel needs to be blessed.
No, I was actually
some Ric Flair in you, Joel.
I was doing my Ric Flair after he hits a doobie at the Benzinga concert.
Woo!
I loved Ric Flair. I was a huge Ric Flair Let's not bring it back into sports though, because not
No,
that
no, no.
WWF
Let's
is a
not. Let's
sport,
not.
but it felt like a
We're
sport to
bad
me when I was a
sports
kid.
fans out there. All right, let's keep going. Let's go to Piper Sandler upgrading Array Technology. Solar stocks have really been pushing. Say that solar stocks can surge another 60%. It's been pretty good environment for solar stocks.
Unbelievable. That's what we've been saying. There's separation happening here, and you can clearly see. You got the lithium stocks that just don't seem to pull back. You got the solar stocks that just don't seem to pull back. And then you've got, if it doesn't have, the hot story, which still is solar and EV to a certain extent, like the lithium plays off them. And Tesla's always held up well too. They're throwing it out, and it has been saying, we've said ARKK has actually held up fairly well in this recent sell-off. This sell-off has not been the growth sell-off. It has been the value sell-off. It has been those stocks that people have been hiding in, saying, like the Metas, that's lower PE, how low can it go? Well, the fun thing is with math, when you got a PE of like 18, it goes to like 12. Oh, you lose 33% of your money. So, I mean, it can happen actually very quickly. You see like stocks out there with PEs of 7, they go to PE of 6, and then a PE of 5, and it's like, boom, there's a 30% fall in the stock price. So low PE stocks can sometimes be very dangerous. This has been one of those environments where if you got the value, you're looking at value stocks, it's been those stocks that have been getting hit. People keep saying, what's happened to the oil stocks? I mean, the oil stocks have been absolutely ugly here for, the last like a couple weeks here anyways. So we had the nice rally in August and everything, but since then you're seeing just a rally. Caterpillar, another example of a value stock selling off. Deere looks like it's ready to fall off the cliff, Joel, if you bring up that Deere chart. And I just went through a whole bunch, but go to the Deere. I took it away from Array because I don't want to talk to small stock. Deere, DE, head and shoulders here all the way. Look at this one, Joel. We're bouncing a lot of charts here right now, but just giving you a feel, letting you know, like, this is like the value sell-off here.
But I again, also think that growth's been sold off too, though. That's the only thing.
Not
I think it's
really in the last week here,
ARK
Mitch,
looks
though.
okay. Look at ARK.
I mean, but ARK is hanging on mainly on biotechs. It's not because of their software names.
Yeah, but Zoom hasn't went down in 2 weeks. It's just hanging out. Peloton really hasn't went down. Like, you're looking at these, really.
I mean, I would go to the kind of tech names like Nvidia, AMD. Those have been getting hit hard. Qualcomm, Micron.
Have they really though? I mean, they've went down a bit, but not as bad as the value. It feels like it's value every day getting hit. So maybe I'm wrong. Maybe it's selective perception on my part. But Roku is another one. It's held up.
Yeah,
I mean, all these things have been hit so hard.
Yeah.
I mean, it's like seller exhaustion is what it is really in these stocks. It's not that these stocks are all of a sudden good. It's just the fact that everybody is sold.
Not going down as much.
Yeah, it's seller exhaustion. We talk about buyer exhaustion all the time. This is seller exhaustion on a lot of these stocks. So, and I don't know if that changes anytime soon. So, not saying you're safe to come in, but like I said before, the reason I said back in May, or in June too, that the ARK low, 52-week low was in, it's just I felt like it already, like, it's down 75% from the highs. I mean, there's not value there, but the people who wanted out got out.
I guess I'm a software hater, but
but Microsoft and those companies you're talking about,
those are value.
Well, I didn't say Microsoft, Nvidia, AMD.
Okay.
Yeah,
but it's not those. No, we should separate it. You've got like value, and then you have like tech that's got reasonable or at least making money tech, and then you have the Kathy stuff that doesn't make money. And it's those stocks that don't make money that have actually held up the best in the last month, I would say. So you have like 3 groupings of stock: pure value, the tech that's got reasonable valuations, a little higher valuations, but they're cash flow positive, they're making money. You can throw the AMDs, the Nvidias, and all that in that same group. And then you have the nosebleed valuation tech where they don't make money, they're just trading on story. It's actually that group that has held up relatively well in the last couple of months.
Yeah, I agree. I mean, it's not, they've just gone down less on a relative basis. And in fact, you look at Kathy compared to that May low. I mean, that's going to be, if you can make it through the rest of September, you can make it rest of October, November, December, Dennis, and that low holds. I think that call on that May low, I think that could be the call of the year. I really do.
And then and you look at, and Sabrina's saying, look at a stock like Oracle. I mean, this is pure value tech. ORCL. Look at this, Mitch. This is what I'm talking about.
Oh my Lord, I know.
I mean, look at this. This was a stock that actually reported, and they decided they kind of wanted it, and then they pulled the rug out from under it.
It wasn't that good
was
of a
all
report.
Adobe.
It was not a. It was
Well,
not
that
that good.
that's a good
That
point
was all.
too.
That was
That
all
didn't
Adobe.
help. That didn't help.
Adobe drove those down.
That didn't
Yeah, but
help.
that
and
was
that's a
after
good
they
point.
reported, and yeah, and then
But
some
Oracle
analysts.
is what's the PE on Oracle? 12, 13? Like these are the kind of
It's
stocks
low.
I'm talking about. Meta, Oracle, these like, oh, it's safe to go in these because they make money. The PE is reasonable. It's under market multiple. Every analyst on CNBC coming on there, and when I say every, I mean a lot of analysts. Somebody will say, well, somebody didn't say that. You say every. Everybody jumps all over your words here when you're doing a live radio show.
Yep.
But I mean, I'm looking at these stocks and I'm like, these are the ones. Microsoft too, to a certain extent. Microsoft is value tech. And yeah, it's 24 times, but it's still kind of value. It's in that making money. It's been that Microsoft sitting right there. It's 52-week low.
Yeah, it is. It is.
So there has just been separation happening, the rotation, and I can feel it. This is probably why I've had a tougher trading month, because there's this wicked rotation, and you're caught on the wrong side. You're seeing some stocks go up, some stocks go down. I mean, today in the morning, everything is red, but I'm going to tell you, there's going to be separation here again today. Just as much as Netflix is green, there's going to be some stocks that all of a sudden just turn around and start catching a bit. And you got to know, if you're day trading, there's groups of stocks and then they all move together. Like the consumer staples on Friday were all down, and then they turned around and they all started going higher, just, quietly. And obviously it's not every stock, but I'm looking at them. There was a lot of, even healthcare stocks that turned around and started catching a bit. So got to know your groups, and you got to know how everything's trading and how everything's related. But there's certain sectors that are just outperforming other sectors. This has not been an everything sell-off.
All right, let's go into maybe some earnings stocks for later this week. You got Costco on the radar, Darwin Restaurants, General Mills, Lennar, but let's do Costco first.
And here's a risk too. It's seen as, Costco is seen as this recession-proof stock, but the nosebleed valuation has always been there. But people are hiding out there. I'm scared with Costco. I'm scared with some of the utilities, but I've been wrong with the utilities for a long time because they keep holding up for whatever reason. I mean, they haven't really gone up far, but they haven't sold off either. So these stocks still just are being held on because they're seen as recession-proof. And if you're going to recession, utilities, people got to pay their hydro. People got to eat, and they go to Costco. That's why there's still money hiding out in these places.
We've gone twice in the last couple of weeks. We went to different ones. When we went on Saturday, the parking lot was full, but the lines weren't bad. I mean, it seemed kind of empty. So I don't know about the Costco indicator. You've had a nice pullback from 540. I'm just looking at this area ahead of the report. I think if people are gonna if this is gonna rally into the report, maybe hold this 493.62. Bad day, CPI day. I mean, it's just a tough chart. I mean, if you're buying it here, you look at this 480 to 490 area, 480 to 500, there's really not much in there. If you're looking at a shorter term today, I'm sure a lot of people would like to see that closing price of 504.14. You may get a look at Friday's low, 497.30.
Yeah, we'll see what happens with Costco. The one that I've been watching that I don't know why it keeps holding up is BJ. Very similar business. Keeps holding up on the daily. Looks strong.
I don't know. I mean, you mentioned this the other day. I mean, when that 75 buyer goes away, then, we'll see. Are they going to step up to 78 now? But look at that, 4 days in a row right there.
It's seen as recession-proof. These where you go in and people got to eat still. People are hiding in these names. You have money managers that are hiding in these names. The one thing to consider is that this is a crowded trade. So, eventually, I know we've said this before and we've seen this before. If the markets start to get ugly enough, they start selling everything eventually. And we started to see that happen, back in May when they started hitting it all. And then they turned around and had the huge August rally, and a lot of these stocks came out of the gutter. Remember what the utilities did back in June. They rolled over 10% in about a week. And you're like, what happened? Crowded trades come off and they bottom back. But it's just, I don't know. Like, why am I sitting in a utility stock? This is my question. Why am I in a utility stock like XLU for a 2, 3, 4% dividend? And some of these are 2, 3, 4%. When I can just go buy, you can just flat out buy treasuries now. Or you can go, Canada, buy GICs and get 4%. And they're completely risk-free. So if you're sitting around trying to collect, it used to be like, oh, I want to get that, income. I need that 4%. You can get in risk-free assets right now, at least if you go, get away and from and even looking, Canada. I mean, fairly safe. Ontario's never defaulted, on anything here.
I just got an
GICs.
email. I just got an email from Ally Bank telling me about 18-month Treasury 4%. I'm like, well, I mean, that doesn't sound too bad. So it
There you
seems
go.
like
There's the TINA trade. We've said this before. The TINA trade is dead. What does that mean? There is no alternative. Is dead. There is alternatives now to
Many
stocks.
alternatives. Yep.
Don't count that out. And if interest rates have to stay up for the foreseeable future, people will look at that. I mean, I had a bunch of preferred stocks paying me 5%. I sold them all because why am I going in a preferred stock with risk for 5% when I can go in a non-preferred stock with or when I can go into a GIC which has no risk unless Canada's going to unless we're going to get these major bank defaults happening here. But these are insured, up to certain amounts. I don't see why take on that risk. And I think eventually other investors are going to say the same thing here. That's why I don't think I would hide in utilities right now.
Let's see where Tim Quast or Tim Quad Expiration, man. He nailed it. Let's add him to the string. You nailed it. And you gotta, like, when I interview you, you gotta interview me. You gotta come back. And I was like, Tim, you're saying the market's rallied. There's all this overhead supply out there. Go out there and just short the bejesus out of the market. Why don't you because you said, that was my exact question. I go, oh, the market's rallying, but there's still a lot of supply out there, huh? A lot of sellers out there.
Well,
where are the buyers going to come from now, Tim?
I can't come close to your inimitable way of describing it, Joel. But you're correct. We talked about this last week that when you look at the supply in the market, that there's the probability that the beatings will continue until morale improves, as the old saying goes. Yeah, and when we say supply traders, and if you're not familiar with the way that I think about the market, I think of it just like any market. There is supply and there is demand. Demand comes from you and me. There are the investors and traders. There are folks who trade derivatives. We'll talk about that. Very important thing to understand. There are people who trade prices, the folks we can't compete with. And then there is supply in the equity market, just like there's a supply chain in any market. And the best way to understand the supply chain in the stock market is to look at short volume, not short interest. We've got this Fed meeting coming up on Wednesday. It's actually Tuesday and Wednesday, and the statement on Wednesday. Well, the Fed created short interest in 1974. This SEC had nothing to do with it. There were no electronic markets, no exchange traded funds. There wasn't even an index fund until December 31st, 1975, as I recall. I was pretty young then. So the point is that short interest, which everybody talks about, is a largely useless metric in a market that is 100% electronic, over 95% algorithmic, probably close to 97%, and where the market makers are exempt under certain provisions from having to locate shares to short. So we look at short volume as a supply measure, and it is at all-time record levels. I heard you talking about utilities. It's at all-time record levels in utilities. So you're absolutely right, Dennis. You don't hang out in utilities if more than half of all the trading volume is coming from supply that is artificial, borrowed, or created by market makers. And it is at record levels. We just have never seen anything like it. Now, maybe that all works out. But clearly, if the supply side is overweighted, any decline in demand, any hesitancy by investors and traders is going to hurt the market. And so that's what we saw.
Tim, a lot of things have changed since you were on last Monday, and it was a great call by you, obviously, to be taking profits into this, because we absolutely have seen just nonstop selling really since the CPI data came out. It's 4 days of just ugliness. We're continuing that trend here this morning. Do you see anything in your data to indicate that, hey, maybe it's time to start nibbling here?
No.
I tried to softball this.
I would, there's always something to trade. I could look at Clorox and make a case for CLX, but we're down to that. I can't say, well, go trade this sector the fangs or whatever we're calling them now. Yeah, I can't say that because the data just aren't very good. And if I can, here, I'm going to show you this. This to me is the best answer. I would like to just look at where the market was at June options expirations, July options expirations, August expirations, and now. Options expired Thursday and Friday last week, and new options trade today. And it's a very important time to look at what is occurring in the market, because it will be a good harbinger for what's going to happen. And so if I successfully, but you can see I'm in New York City. So that is
You're
actually
everywhere.
the Hudson River behind me.
Yeah.
So I'm at 43rd and 8th at the Westin Times Square. And so I've got a great view on the 38th floor here.
What are you doing in NYC?
I'm speaking on market structure for the American Gas Association's Investor Relations Workshop. I'm going to describe, why you can't do what FedEx did last week. Stuff that you don't want to do.
Don't warn.
I'll be in New York on Wednesday, Tim. I'll come by.
Not warn in this market.
I wish I was going to be here, but I head back to Denver tonight.
Man, you see that? Tim
he's everywhere, man.
He's everywhere.
He's everywhere.
Yeah. Life's short. You got to keep moving. So
he's a nomad.
Got to keep moving. That's a quote for you there.
This is supply and demand in the S&P 500. So the gray part of the graph is SPY. So great proxy for the broad market. The green part of the graph is an algorithm that measures the way that investors and traders buy and sell stuff. And when there's more buying than selling, which is difficult to determine in a market driven by algorithms, which are designed to deceive everybody, but we can get a good read on that. And so as the green part of the graph rises, there's a top. And when the green part of the graph bottoms, there's a bottom. And down below, here's the supply side, short volume. This is what I mean about a record level. It is way over the trend and continuing to rise. But look at this, where these little green things are, these are options expirations. So here's June. So demand was near a bottom in June and supply plunged. Well, what's the market likely to do? Rise. Any returning demand is going to lift the market. So then we get to July options expirations, and the market is way high yet, but bottomed at about 5.6. Well, that's pretty strong. It's bottomed again, another bottom. Well, the market then soared from there. And look at this colossal drop in demand or supply. It's one of the strongest and steepest declines in supply that we've ever seen. And the market exploded all the way up to August expirations. It was a great, the SPY was at 430 again after getting down to 385. But look what happened. This is the top from a demand perspective. There are options expirations, and the market imploded and supply exploded. Here's the trouble now to me. This is what concerns me. This is we're closer to a top for sentiment than a bottom, and supply is off the charts. Well, that doesn't give me the warm fuzzies. I could look at that and say, we could go all this distance back down. In addition to what we've already retreated. Look, I'm not saying that'll happen. None of us want that to happen. But these data, if you want to know when to buy the market when demand is rising and supply is falling. Don't buy it when demand is just about topped and supply is still rising. That's not a good time to be heavily exposed to the market. That's just, it's a basic supply-demand economics conclusion.
So you're saying supply is still very high here.
Look at that, Joel. I mean, what this is telling you is here's 50% of market volume. This is the trend line over a 90-day period, all the way back to June 16 through Friday. And this level, so we're never before have we recorded levels of short volume in the S&P 500 composite stocks that is over 50%. And it's been there now for more than a week. So yeah, that is, and the trouble with that is that supply will drag the market down further unless somebody consumes it. Well, as you said, Dennis, you were talking about interest rates. Well, who's going to buy stocks that are falling when you can buy 4% fixed income securities? You can buy 2-year treasuries. Yes, it's a big problem for the market. There, as you said, there is an alternative. It's an alternative. You can earn 4%, or you could put your money into the equity market and risk losing 20%. Well, which thing seems more appealing? That's the challenge. There are always things to trade, but we have to realize that those conditions exist.
Yeah.
Tim, what are your thoughts on FDX and their warning during an option expiration date?
And well, they clearly didn't check with you, did they, Mitch? Right?
No,
So
they did not. They didn't give out the memo.
And there's a twofold lesson. There's a lesson, traders, for you, if you're going to bet on what a company is going to do, what they're going to report. And hedge funds generate 2/3 of their returns betting 2 weeks before and 2 weeks after around earnings events. So there's a lesson for us traders, and there's a lesson for public companies. I mean, this is a thing that disturbs me as a guy who spent 28 years in the investor relations profession, that the investor relations team at FedEx was not in the room to tell the executive team, don't report or don't put these results out as the options that expire, that September options are about to expire. Why? It's a very simple reason for public companies, and then I'll talk about it for traders. If you release news as options are expiring, which are fully time decayed, meaning they've lost almost all of their value, all of that will be marked to zero, and the new options that trade today will incorporate that. And what's the problem? Well, about 20% of FedEx's market cap hinged on options, derivatives. Well, all of that gets marked to zero, and it's gone, and there's no possibility of seeing those options get retraded because they're gone. And now it's baked into the new series to boot. So all they had to do was wait 1 day. Just wait 1 day and report that news after the close on Monday. Why? Because a new option series trades today, and it will not have that information. So it won't get marked to zero because it's also got 30, it will run all the way till October 18th or 19th. Thereabouts, maybe the 21st. So you've got all this time for people to trade those options and restore some value to FedEx. And that opportunity has been blown because they didn't understand it, and they didn't have the IR people in the room to make sure that happens.
Do you think
that's the lesson for public companies?
So you don't think it would have went down as much as if they would have done it after the close on Monday?
Well,
theoretically.
Rather than 20, maybe it goes down 17. You say, well, what difference does it make? Well, here's the difference. Now those options will continue to trade, and they will be very attractive for traders. Will I buy an option series that has lost significant amounts of value that has a long way to run? Well, sure. Because if I buy them, I might be able to turn around and sell them to somebody else for 75% more than I bought them. Well, that's a great trading opportunity. And all of that gets baked into the pricing and valuation model that algorithms use. That's what you have to think about. Too many people spend all of their time thinking about what are the thinking people doing? No. The market is run by machines. So you have to think about what the machines do. And that's what's being missed here, right? The machines are in charge. And so for traders too, because you could look at this and say, well, right before they reported that news, demand in FDX was rising and supply was below trend. Everybody was betting long. They were going to be buyers of the new series of options trading today. So if I'm looking at that, I would say, well, there's a reasonable chance that the stock could rise. It's not back to 5 by any means. I like to buy stuff that is 5 or higher because there's excess demand. But this is how you get caught out, traders. You don't want to do that. Don't beware that during options expirations, no matter how fervent your belief is that something's going to go well, if it's during options expirations, you can get chop blocked. And so beware and don't do that.
Tim, you piqued my interest here just real quick.
Yeah.
With the investor relations. You're doing that for a long time. Could you share with us like the biggest investor relations disaster that you've had to deal with? You don't have to say the company.
Well, I had one. This was a long time ago. I've been out of the IR chair for a long time, but I was in New York, running around with the CEO and CFO of the company. And it was a Thursday evening. We were having a great, really nice dinner because that's what you get to do when you run around with the CEO and CFO. I get word from the controller that the treasury, the treasury analyst who's functionally responsible for what happens in the treasury department had suddenly resigned. And the CEO and I look at each other and we say, well, that can't be good. Why would he suddenly resign? Turns out, making a long story short, there was fraud in our Treasury Department, and over $200 million of Treasury money had been moved around, and Russians made off with part of it.
Oh, wow.
So it ended up with an FBI sting, and our CFO had to resign. That was the biggest IR disaster I have been through, Joel. But
Wow.
That's way before all the machines were running the market. Today, there's I've seen many disasters this way. With Snap reporting during options expirations, not realizing that if you just get outside of it, you'll be better off. Let traders help you. Don't harm them.
Great point. Great point.
Is there any area that we can look for some trades, Tim?
Well, notice my Benzinga September 9 portfolio. What I love to buy is rising demand and falling supply. Well, look at the components of this. There are 5 elements in here. Passive money's leading them. Healthcare is the lead behavior or sector. And look at this, demand's rising, supply falling. So that's the stuff, if I'm going to trade anything, that I'm going to trade. And here are those stocks. This is a exclusive to Benzinga to be able to see what these things are. So to me, the best stock in that list, I already mentioned this, Clorox. It's because it's a 5. It's a stable stock, but the supply side has plunged. And so I look at that and say, well, that's probably where, if money's going to go anywhere to try to protect itself in a market that is very volatile and risky, it goes to Clorox. And notice that Clorox was up on Friday with options expiring. And then I'd add in Bristol-Myers Squibb, surprisingly, Match, Boston Scientific, DraftKings. It just means that 3 of those are more healthcare related, and so that's why healthcare is the principal group. But there are some ideas. Again, it's a risky time. I'm not going to be trading much of anything until we get out of VIX expirations on Wednesday, which will coincide with Jay Powell hiking rate 75 or 100 basis points.
You know where else money goes though, and where money is going, and we can clearly see it. It's the U.S. dollar.
No question.
And everybody thinks the U.S. dollar leads. I will tell you right now, it's the equities that are telling you where the U.S. dollar is going, because as the equity markets go down, people are buying U.S. dollars. And
no question.
You're seeing, and just as much as they're going to Clorox, they're going into U.S. dollars. Is why the U.S. dollar continues to show strength. And obviously that trade can reverse as well. But I'd almost rather own U.S. dollars than Clorox, because at least I don't have the individual company risk in that.
I heartily concur. There's no question, Dennis. If I look at the full data set for the Dixie, the dollar index versus a global basket, my machine's slow here. Here we go. Okay, so it's starting to draw this maybe, but the point is we're at 20-year highs for the dollar. I can't get it to show us this, but you have to go all the way back to 2001 to see the dollar as strong as it is now against other currencies on the planet, which means we ship all of our inflation to everybody else. That's what it means. And so the whole planet gets hammered by what happens to the dollar, and the dollar is very, very strong. Because why? Because instead of expanding the supply, we have indicated we're going to decrease the supply. The curious thing is, if you look at the Fed's balance sheet now versus September 16 last year, it's still $500 billion larger today than it was then. And already the dollar's at 110. Yeah. And you can think of 100 as about parity. So we're 10% more valuable than everybody else's currencies put together, and we're still hiking rates, and we haven't even seen the Fed shrink its balance sheet. It's only down about $60 billion on an $8.9 trillion value. So yes, we could continue to see that, and it is an issue, no question.
All right, that's great. Tim Quast out there in New York City, Market Structure Edge, joining us here on this Monday. Not as, I would say, not as bearish as you were last week, but I can't really throw you. I can't throw you in the bullish camp yet.
There's no stampede of bulls.
No, I don't see you on
8th Avenue
going kissing that bull in front of the New York Stock Exchange or anything.
No, that's right.
Not yet. One day.
They haven't
get them back next Monday. We'll see if things have changed again.
Okay.
Right.
Wait,
thank you, Tim.
Wait, guys. I'm in Italy Monday.
Oh,
so
you can't come in from Italy.
I don't know. It's a tough time.
Dennis, did you get that out of office memo?
I don't know if we're going to allow this.
Yeah, did we approve this?
I'm not sure we approved this.
We may have not. I might not have submitted
compliance
a request.
Oh, that's what happened. He didn't submit the request. There you go. Have a good one, Tim. Take care.
Hey, Tim.
You guys too.
Hey, Dennis, just one thing about owning the dollar over Clorox
Yep.
is you don't have a way to fight COVID.
Ha. So if the COVID racks
Ha,
up,
ha.
yeah, you're not
Look at
getting
this
all
guy,
the-
Joel, throwing the COVID puns.
All right, we're rallying. Dennis, why are we rallying? What is going on in the market? We're up 24 and a half handles off, or we're down 24 and a half handles, 20 handles off the low, trying to get to mid-range on the session. What are you seeing out there? Where are the buyers coming from?
You got to give a perspective here. And I had multiple people reaching out for the weekend and saying, why won't the market sell off? And I was like, what? What? We just went from 410 to 382 in 4 days, basically. We just sold off 9%, or not 8%. What is that? 40, 35. Yeah. We just sold off like 8% in 4 days. The overall market, 8% in 4 days. That's not a sell-off. That's a disaster. That's a disaster is what that is. So we have sold off. So you're coming in selling stocks now. I mean, this time to sell stocks was before CPI or right after it printed, when I was like, get me out, 405 SPY, 403 SPY, 402 SPY. Just get me out because this is not coming back here today. That was my opinion. And obviously I got paid for that opinion, and it's continued to go down 200 handles since then. But now we're 382. Now we're coming back to the June, July lows. Not saying as a case to come in and buy stocks here, but I'm not selling with
We're not there yet.
I may be
Dennis.
selling with like a half a hand on rallies. So we're
not there. We got a long way to go to get to those June lows.
But we sold off 8% in 4
No,
days.
I know.
There's not a lot
I know.
of times you sell off 8% and then the next week sell off another 8%.
You know
It
what?
might happen.
I'm looking forward
Maybe
to
this
tomorrow.
is going to be the week. Maybe we know if we go to war or whatever, this is obviously going to be the week, but it's not going to happen. But I mean, I think we're still in this environment where there's going to be some chop. I think if you haven't raised cash now, I'd wait for another rally to raise cash. I don't think I'd be selling into the 8% 4-day fall.
Guess who's coming on tomorrow?
Who's that?
Craig Johnson.
Let's get him in here because I want to know the
I
bull
know,
case, how
I
we get
know.
back to all-time highs. And I love Craig, and Craig has been right so many times. And he's still, I'm curious if he's still of that same opinion.
Yes, because besides having these guests on the show and spending hours and hours preparing for that, I keep in contact with these guys, right? And he was calling for 3,500, and we blasted off. And I said, Craig, did we miss the bottom, or are we coming back down to 35? And he's like, he was firm. He was firm in his stance that we were going to retest the low. Now, y'all know I don't want to retest.
Yeah, but then Craig
low.
said we're going to make all-time highs by the end of the year.
But we haven't tested 35. We haven't tested 3,500 yet.
He said we're going down to 3,500, and then we're going to make new all-time highs by the end of the year.
Yes.
I mean, I don't know how we're going to do
Neither
all of
do
that
I.
in 3 months.
Craig Johnson tomorrow, right here.
I got to hear
live.
the story.
We're going to have to find
tune in
out.
for Craig Johnson, because
Tune
Craig
in.
is he's been right a lot on this show. So I respect his opinion very much. I would love to hear how we
I'm
get back to
telling you,
all-time highs.
yeah. Unless I'm misquoting him, and if I do, I'll
he was on the
apologize.
show. I know he's making new lows, take out the lows of the move, and then eventually making new all-time highs by, I don't know if it was the end of the year, but it was very, he was very bullish after we made those lows that we were eventually going to, the bull thesis.
Yeah.
I still want to know the bull thesis. I can see clearly the bear thesis here. The bear thesis is all around us. I want to know the bull thesis.
Yeah, even the bulls are starting to kind of get more towards those June lows. A lot of people were starting when we were up there towards past the 420s. They were like, no, we're not going back down there. Now it seems like almost everybody is into that camp. And we're going to keep watching to see what happens in the markets today. Of course, it's about to be 9 o'clock. Last little levels on the SPY to watch today.
I'm trying to draw a hopeful trend line here off the June low.
I like that hopeful trend line.
Yeah, hopeful trend line. We're in the red. I'm not seeing any chance of upside here until we establish a firm bid over 38.73. Bears are totally in control to that point. Pre-market high after that, under your low, you took out Friday's low. So for those that were hoping for the low on the quad witch expiration, right now that scenario is out the door. And my next daily low comes in at 38.37.75. That's your July 18th low. But I'm going to let you guys finish it up. Great
I'm
show
out
here.
too. It's 9
We didn't get
o'clock.
to do another one bites the dust. I could not find the video because I think we'll get in trouble. Yeah, Jimmy Spider-Man Allen. I was the one that did it. Everyone have a great day.
Great Queen song. Great.
Back with you later on.
I'm out too. Mitch, I know you're dance right into. He's dancing into his next show. He's ready to rock.
Gotta
you
dance,
get more money, Mitch.
dance. Keep it going, guys. We're gonna keep it going here, like always, right here on Benzinga. Let's go ahead. Let's get it going towards live trading now. And a little bit later, we'll have, of course, some futures action. We'll get into stock market movers. I will have some analysts on like we always do. So come on over at 1 p.m. Eastern to stock market movers. And later this week, I wanted to let you guys know, guess what? Benzinga is going to be joining the Qualcomm Investor Day. Yes, they called Chris and I. They want us out there. Chris Ketchy and I are going to be also doing a New York Stock Exchange tour with Jay Woods. So stay tuned. We got a lot of content that's going to be coming to you in the next week or so. So right here is where you want to be on Benzinga. Stay tuned for that. And then coming on now, we got some live trading action. I'll see you guys on over. Let's see if we can make some money. Let's go.